Bonus question. Did you need candlesticks to form an informed visual decision? Question. Are you overlooking simple chart signals because you are overanalyzing candlesticks? Would you agree that there are way too many candlestick formations for you to master them all? Remember, trading is already complex. Why add another layer of complexity? The truth is that in some situations, there could be a simple, straightforward method to identify trend reversals or trend changes. Trying to understand what all these candles are saying can be a hit and miss daunting task. Could there be a better way? Instead of obsessing over candlestick formations, how about this daily line that connected all these lows and, as we can see, gave us a rejection signal here, which is coming off the highs right there. And again, remember, the line comes from connecting all of these multiple lows. This is where we get this trend line, which, by the way, coincides with a break of the trend coming off the highs, and we got resistance on the same line, giving us this opportunity for a swing trade lower. That's the daily chart for this energy name. The same stock, this time on the weekly, we can draw a similar line, which gave us this break point and now giving us resistance here, indicating that we are looking for movement lower, again giving us this possibility of a top right there, unless we can come back and clear the line to the upside, and clearing the red line to the upside would in itself be a buy signal. Now consider these candlesticks. What are they saying? I will show you how the same chart, the same stock on the long-term monthly chart is giving us a reason to suspect resistance here. This is 3 years of monthly data. In our multi-time frame analysis, we can see here in this long-term view, if you take the lows of early 2000, the lows of 09 and lows of 2018, get this trend line here, which is currently showing us a double top for now, with indication to anticipate prices to be drifting lower unless we can clear and move above the red line. Moving above the red line would be a fresh buy signal, but for now we are being faced with a double top, as we can see right here. By the way, I will ask you 2 questions at the end of this video after you have considered the market message that has been provided by the charts I am showing here. Now let's consider this USO monthly chart and the fact that over the last couple of months we've seen a rejection back below this red line. Now consider this weekly chart for crude oil, showing the probability and possibility of either finding support or breaking below this recent weekly RSI lows line. Consider the weekly chart for USO, which tracks crude oil, and the possibility of either finding support and coiling higher, or at the moment we are showing possibility of breaking below this multi-year RSI lows line. Consider the XOM Mobil weekly chart, and we can draw a backtest line as such, and already we are seeing a rejection on this backtest line and prices are already recoiling lower. Now consider this weekly chart for XLE, and we can draw a similar line connecting these lows here in 2020, connect with the lows here, and we can see came close here. We broke below the line here for this big down week, and we are seeing rejection again. Prices are already being recoiled down, with the probability now of drifting below RSI 50 as a side note, which would only increase the volatility lower as it cracks below RSI 50. The pressure could be to the downside for now based on what we see here. But here is a question for you. Now that you have seen the chart evidence provided here, where do you think crude oil, gas prices, petrol prices will be in the coming months? And question number 2 for you. Have we already seen major highs, or are the charts currently saying we are set to make fresh higher highs? Bonus question. Did you need candlesticks to form an informed visual decision?